All right. Good morning, everyone. Dan here from tradingology.com and the trading room for April 27th, Tuesday, 2021. As usual, we do have Dave joining us from Strong Market and our partnership over there. So good to see you, Dave, and welcome, Andre. Good to see you this fine Tuesday. Can you see me and hear me, Dave? Are we coming through?
Yep, you look good.
Very cool. Very cool. Happy Tuesday.
Happy Tuesday.
I was literally just closing up a quick scalp on the MNQ futures.
Yeah, strange market this morning. Kind of all over the place.
Yeah, I grabbed a little, we came down here and it's starting to level out. So I saw it turning around literally within the last 3 minutes. I just grabbed a little long and I said, I got to start the trading room. So I closed it out a little early. Nice little target still waiting up here.
Oh, good. Yeah, it looks like the market's kind of all over the place. We can go through the numbers, but again, we have very muted up and down volume and internals, and number of issues up and down is pretty much flat.
Yeah, it's right at that. We opened up about 500 up, but that lasted all of 5 minutes or so, as we see. I'll zoom in a little bit here. Yeah, everything's hovering right around zeros. We see spaghetti junction down here, no real bias either way. And we'll pull over the indexes. NDX is actually moving down. It is negative right now, just under 0.5%, 0.4% down. The Dow's down 0.1%, and so is the SPX. So that is our outlook there currently. Good morning, Andre. Good to see you. Good morning, Mark. And yeah, we're definitely muted, as you say. There was definitely a down movement off of that big internals move down, as we see all the futures and the ETFs across the indexes took a large move down. And I did see
right at the open
the one headline, I don't know if this is related or not, but we got the Fed talking about, hey, they're going to stay put, even though everyone's got concerns about overheating the economy. That's a new one.
Well, if you look at when we do the Wealth Masterclass, we're not going to go over these because we went over in the last one. But if you look at soybean, SOYB, corn, wheat, and what was my other favorite one there?
Seed?
Cane.
Cane, there you go. Cane or Joe.
Cane and Joe. Whew. They have rocketed in the last few weeks. So, I mean, that's a pretty good indication of inflation. However, Pumpkin Powell just says no. Ain't gonna happen.
Yeah, I'll zoom in on this USCI, the U.S. Commodities Index. I've made these a little bit easier colors to see the long-term and the short-term channel. So this is one we've been charting. I put these green channel bars around this one.
Okay.
And as we've seen recently, we had our short-term channel that's been moving up, right? And I've been tracking that with the fibs.
Yep.
The fibs target of 42.75. We are above that channel now, everyone.
Yeah, that's an interesting breakout. Now is that weekly? Okay.
This is a weekly, so we got to wait 3 more days.
Right, because we went above it before, right there, and then we closed below it. So we'll see what happens this time.
Yeah, I've actually leveraged this little mini breakout, if we want to call it that, to take some profits on our commodities, or at least my commodities position.
Yeah, nice. I think it's good timing. If we rose above it and then closed below it the last time, there's potential for it to happen again. But we shall see.
Yep. At least that way, we got some profits locked up, and if we get a little pullback, well, I'd love to see it come back down here and bounce off the bottom channel again.
Yeah, that would be nice. I think that may happen. I don't know. Interest rates, if we look at the 10-year, I mean, that's really kind of my barometer. The 10-year and the 30-year are up today. Just kind of hovering around that 1.6 level on the 10-year. Pull back after it reached a high of like 1.8 or 1.75. That's kind of the barometer, I think. If we start to see overheating in the 10-year, we'll see commodities continue to rise. But if not, and Powell in that headline said, no, we're keeping interest rates low.
Which he kind of is stuck in because he said it last year where, they weren't going to move interest rates for years, right? So that's not new. So at least he's holding true on that.
Yeah, well, Yellen, when she was still the Fed chair, stated that we're never going to have another financial crisis. So
because they're just going to put 80 billion on tax audits from the rich. And what do we got going on here? Ransomware attack. We got a new ransomware attack happening. Oh, the DC police computers were hit. That's interesting. I hadn't seen that one yet.
Oh, wow. Yikes.
That's like the new, we talked about that once or twice before too, right? You know, wars aren't always boots on the ground anymore. Wars are cybersecurity now and ransomware and locking up. Now they're going after police computers. Interesting.
Yeah, that's right. Specifically the ones in DC. It's kind of, I guess that's a kind of a, I guess a, you know, a target, but still, you know, anyway, we have that, and we have some other headlines that are quite interesting today, including Tesla's earnings announcement last night.
Oh, yeah.
And this morning, a few pundits have gone through it, and I saw some opposing views. Some thought it was very positive because they actually made money. But then the opposing view was they made money because of tax credits, energy tax credits from the government. And they sold some Bitcoin. Now, they sold Bitcoin maybe before the end of the quarter so they could report some pretty good earnings, right?
Right.
So they use that. If you take out the Bitcoin and you take out the government tax credits, they lost money. They lost a lot of money. They're burning money. I forgot how much it was. I don't want to misquote, but if you take those two out, so they didn't make any money from actually producing cars. I think that's the takeaway. They made money from a Bitcoin trade and tax credits from the government.
Right. So what does that say? What's the actual business you're in? You're in the business. Yeah. I saw someone say they should turn into a trading firm.
Yeah, I mean, you know, maybe they should open up a brokerage account. You know, broker, become a cyber trading company or something.
Right.
I mean, you know, maybe that's why Bitcoin went down last weekend. I don't know, so they can make their numbers. Or
well, that was a large chunk that could have been part of when they went down. Because what was it, 1.5 billion they put in it, right?
I think it was even no, it wasn't a trillion, but I mean, I think it was like 10 billion, which is like about 7% of their net cash flow. And then they ended up selling it. And so they made money on it. I don't know how much money they made, but I mean, you know, if they're going to make money trading in Bitcoin, yeah, exactly. What does it say about their car business? So we're down on it today, huh?
Yeah, we're down almost 5% right now on the day. Down around the 700 mark, give or take, where it's recently dropped down there last couple of days, last week, it looks like.
Yeah. The more times we hit that level, that 700 level, and if we break through and close below it, we're probably going to continue to go lower on Tesla. But who knows? This is a market where everybody buys the dip.
900 was the peak there as I jumped this back to a daily. And
it doesn't look like a great chart, though.
It's my super old Iron Condor when I had that on them down here.
Does not look like a great chart, though. I'll tell you the truth. That bounce off that low there in March looks like a dead cat bounce. I wouldn't be surprised if that was a 50% retracement from that 900
right
to that low. Looks like around 50%.
I can zoom it over to the other one where I have my better tool set up. Let me pull that up.
Oh, there goes the NQ. Shoot.
Dropping right through. See, that's why I get out. Signals tell me it might not stay up there, right? Yeah. Price signals are dropping off. There's the red arrow for confirmation. We might get a little bounce off here. We'll see. But let me pull up a new chart here. I'll zoom this in and see if you can actually watch that bounce while I'm pulling this chart in. Look at that touch.
Yep, right on it. It's kind of interesting that I had an alert on UUP for the January 21st, for January of next year, the call options that we have. And at the 30, I had it set at 18 cents and it went off this morning, triggered an alert.
Yeah?
Yeah, I mean, what the heck happened? Yeah, it went to 18 cents right at the open. Kind of weird.
None of my orders fired, so maybe it was a fake news.
Yeah, it could have been a fake or a misprint or something.
Misquote or whatever, yep. 50% is right at 720.
720, and we're below that now. So it kind of bounced around. It got up to the 3832 level there, but Yeah. So the 50% is right at 719, and we're below that now. That's the kind of the area to watch if you're in Tesla at 720.
Yeah, they could be heading back down to the 6s and 5s.
Good. We'll see. I mean, if Tesla investors are not, I mean, look at Amazon though. I mean, for years, right? Amazon never made any money. They kept building out their infrastructure. They kept adding new services, and they kept doing a lot of things to help build the revenues. And maybe Tesla's doing the same thing right now. I mean, but then you got companies like GM. You have Toyota coming out with an electric car recently that looks really, really good. So you got a lot more affordable options when it comes to EVs. And then you got Lucid on the high end, right? So you got Lucid Motors doing the high end stuff. You got GM and Toyota doing the low end. They're going to squeeze the middle. Tesla's going to get squeezed no matter what.
I've seen there's been some leadership changes too. I think there's a couple of VPs that had left Tesla and went to another competitor. Yeah. So there's some movement around there at the leadership levels too.
Absolutely. And one of the VPs at Tesla for years is the guy who's heading up the engineering team at Lucid.
Yep. So he's poaching a few more guys. Who knows? So competition's good.
Yep.
We'll all benefit from better batteries.
And as long as we're talking about Tesla, guess who's going to be the host of Saturday Night Live on May 8th?
Is it Elon? No.
Yeah. Yes.
That's funny.
It's going to be hilarious. Some of the writers and the actors in the troupe there, the SNL troupe, aren't happy about it. But it should be funny. Somebody mentioned that it might be a good time to buy Dogecoin a few days ahead of time, just in case he mentions it on the air.
Oh, geez, right. Well, I've seen even Mark Cuban's touting that one pretty big on Twitter too. The Mavs are using Dogecoin for stuff.
What the heck? What is the deal with that? There's like no developers in Dogecoin. None. If anything breaks, they're stuck.
Yeah, so we'll take one last look over here. One thing we did notice recently, lots of bullish herding coming back in this market.
Yeah.
We dropped to 78 on the MT vol index. Swig signal turned back up. That's more longer term. So everything's looking pretty bullish on the NASDAQ and the Dow as well.
Now, the one caveat to that, if you take a look at that Dow again, go back and look at the 21 and 27 day sum. Look how long we've been above 1,000. It's been a long time, since like the beginning of March. I don't think when's the last time we turned negative? It was like
one time we hit negative early March, but yeah, since they were both negative, it just dipped there once. Look at that.
Yeah. Yeah. And before that, we had a long, long string, and that's October. So October of last year was the last time we went negative on that. I don't know if that's the longest string of plus signals on the 21 and 27 days. But it's been a long, long time.
That's taken the whole spreadsheet 5 years into account there.
And you can see before that drop off, it was relatively stable. I mean, now it's a little bit more volatile, right? You can see the volatility is really picking up since that.
It's much smaller, a huge drop.
That was 2008, I believe. That was 2008, 2009.
Let's see.
Oh, no. Or is that the... I don't think you got it all the way back to the 5 years. Yeah, I don't think you got it all the way back. I think that's March of 2020.
I can go look. I hover over it. I got 0.136. So let's see where 136 is.
Yeah, maybe it is back that far. I don't know.
136 is 2016.
Oh, 2016. Yeah. Yeah, it can't be.
That doesn't add up.
No, you got. I think it started in. That might be. No, because it's below 10,000 at the low level there. So it's got to be March of 2020. Because if you go way back too far, you can't even read it. I mean, it's just a bunch of squiggly lines. I'm pretty sure that 10,000 is March of 2020.
Yeah, I was doing some adjusting on that page at one time. There it is.
Yeah. Yeah, I don't think I've ever seen it that negative before at minus 10,000. Even back in 2018 when we had that big drop off. No, that hit 10,000. That's the lowest level I've ever seen it hit.
So I was trying to figure out where the correlation for the point was, because usually it's just lines up with a line item. But yeah, there's where it dropped.
Yeah. So, and then everything after that has been actually pretty volatile as far as the price movement goes on the 21 and 27 day sum. You can see before that it was relatively calm. And it's, yeah, I mean, even though we've gone up consistently and we've been above that, in a plus mark for the majority of the time, that's the longest streak, I think, of the 21 and 27 day sum being above the positive, above zero.
And I believe they're both very similar. Let me look at this. Yeah, same kind of thing happened where we were much smaller on the NASDAQ.
Mm-hmm.
The big drop happened. And yeah, look at that volatility ever since.
Yeah. Yeah, it's been kind of crazy.
So there we saw the recent dip in the techs that we didn't see in the Dow.
Mm-hmm.
So it's now returned to 1,000 above. So, what's new normal going to be in this market? They keep changing the rules and modifying policies and printing more reserves, but the banks aren't loaning it out, or it's loaning out to less people. So as we've always seen, that velocity is going to go negative pretty soon.
Yep.
Versus the supply. And I keep driving around and stuff gets more expensive for me. So I see inflation.
Yeah, everything. I mean, gas. Interestingly enough, I received our quarterly water bill yesterday, and there was a note inside. Our rates on water, guess how much they went up?
10%. 20. 25.
20%.
Wow.
19.5%. Unbelievable. Rates just, we're already paying, I think. I mean, we don't have a water shortage. I'm not sure what the deal is, but they went up 20% in one shot.
Wow.
Yeah, that's a big deal.
That means they're recouping funds one way or another because they're probably missing it somewhere else where something isn't being paid, whether it's property taxes or other taxes that no one's paying because they're on, government funds. And
good point.
So the government's got to find a way to get income somehow because they're even worse in the hole than they ever have been.
Yeah, it's the county, so maybe people aren't paying their county tax bills or whatever it might be. That could be exactly. They have to make up for the revenue someplace.
Yep. So quick reminder, if you guys didn't catch it earlier, they did send out some email notifications. If you're in the Wealth Masterclass, the April meetup is tomorrow at noon Eastern. So look for that in your email. The course has been updated with the Zoom links for that for tomorrow. So it's one slightly different hour time change. So it's an hour earlier than usual. So look for it at noon tomorrow, Dave's time. And we will be recording it always if you can't make it live, covering some new topics. And as always, if you have questions, shoot them over ahead of time if you can't make it, or bring them to the show, bring them to the call, and we'll see if we can get them answered live for you, depending on what you're looking for questions for. As always, go ahead, Dave.
Just to tease you guys, we're going to be talking about the difference between creating. The topic is creating value, and so in your own business, and so versus being a consumer of goods and services all the time, instead of being a consumer of goods and services, being a creator of goods and services. So it's going to be a very interesting topic, something that I've studied for many, many years since I started my first business when I was 14.
So there you go. Come and soak up the information from the fearless leader and put it to good use in your own system.
It'll be fun.
Right on. As always, you know how to get a hold of us. If you got a question, we are live in the Slack channels most of the day. It's been pretty quiet lately, but maybe people are trading and getting their profits and lock them up. I jump in there from time to time. So if you got questions, always look in the Slack channels. Dave and I are both in there. Our emails are always welcome. support@tradingology.com or support@strongmarket.com. We can get your questions answered if you're looking for anything new. We will catch you guys back here on Thursday for the trading room. For those of you in the Wealth Masterclass, we will see you tomorrow.
Absolutely. See you guys. Have a good night.
Thanks for coming out, guys. Take it easy, Dave.
Bye, Dan.